Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro dollar. A very significant moment here yesterday. A third bullish white soldier and the highest high and high close since April last year. It was also a second consecutive close over the very important 50% Fibonacci line of the January 2021 to September 22 move at 109.44. This 50% Fibonacci line had capped the rise of the last 3 weeks, as well as the January move higher. They had only had one close over it. Looking below, we still have the congestion made up from the combination of the flatlining short-medium moving average, currently at 107.53, the April 2020 low at 107.25, and even the trend lines below from the old September to November 2022 ascending wedge pattern. Now looking topside, well, the next levels to watch out for are the flat July 2017 to November 2018 head and shoulders neckline, currently at 111.05, and the congestion from March 2020 centered around the 111.39 area. So far today, a small but further attempt higher, yet another new recent high. The market seems to perhaps be considering the neckline resistance now overhead. Cable, aka sterling against the US dollar. A third bullish white soldier yesterday and a continuing follow-on higher to the recent immediate countering bullish engulfing pattern. Importantly, it was also a new high and high close, one not seen since June last year. Above, we still have target X1 at 125.90, the secondary and hard to reach target for the February to early March descending wedge pattern. All this move higher had been an immediate, if initially modest, but now more significant follow-on higher to the monthly key reversal up made in March. Looking below, under the congestion evident in the 124 to 24.5 area, we next have support at the 50% Fibonacci line of the June 2021 to September 22 move at 123.16, with the June 2020 low at 122.48 thereafter. Looking further above, well, there is the possibility now of this week being a weekly key reversal up. If we close tonight either over 124.15 or under 123.30, then we'd be on. Anything in between and would have an outside week. Right now we are, as I've said earlier, looking at a weekly key reversal up. So far today, well, a small attempt higher, a cautious move higher so far, but seemingly limited in its approach to target X1. Euro sterling. A third bullish white soldier yesterday, with the market seemingly capped once again, if on a closing basis this time, by the overhead flatlining short-medium moving average, currently 88.28. However, but now start looking a little further up at the 50% Fibonacci line of the March 2020 to March 22 move at 88.51, as well as the February to date downtrend, currently at 88.59. Below, and the base of yesterday's action, we have the slowly rising medium moving average, currently at 87.91. And below that, the breached, but important, August 22 to date uptrend, currently at 87.67, highlighted in dark blue on my daily chart. For clarity's sake, there is not a sideways triangle here, because frankly the trend lines are not good enough. Not yet anyway. But I'll still keep an eye on the uptrend and especially on the downtrend. So far today, we'll test up over the short-medium moving average and towards the 50% Fibonacci line at 88.51. US dollar against the Indian rupee. A bearish long black Mariposa yesterday and second bearish black crow as well. That was more than a suitable follow-on lower to the previous session's interesting bearish engulfing pattern. It continued being a rejection of the overhead breached August 22 today uptrend, highlighted in bright red on my daily chart. That's currently 82.16, as well as the further overhead flatlining medium moving average, currently 82.21, and most importantly, the broken optimized lower trend line. That's currently 82.32. This move is now taking on some potentially seismic proportions. Thus, it seems right to lay out some potential targets below for the 2023 ascending triangle pattern. So, a primary target X would be in the 81.15 area, with a secondary harder to reach target X1 down in the 79.95 area. The assumption I'm making is that the break lower is not a false break, which, given where we are, is a reasonable assumption right now. The obstacles in the way below are the rising long moving average, that's currently 81.47, the middle time currently 81.36, and highlighted in dark green of the October 22 to early January this year bearish shift pitchfork, and the 50% Fibonacci line of September 20 to October 22 move at 81.13. Now so far today, a slightly higher open and an immediate move lower, approaching the long moving average below, but showing reluctance in testing it properly. It really doesn't like going to push down there at the moment. US dollar against the Brazilian real. An interesting lower, but still indecisive spinning top yesterday. The base of the action was on the previously highlighted 2021 low at 489.08, whilst the top was sort of capped by the middle time, currently 494.73, of the broken late July, late September 2022 bearish shift pitchfork. This pitchfork is highlighted in dark blue on my daily chart. Now just above this middle time we have the 50% Fibonacci on the October 2019 to May 2020 move at 496.61, whilst just below the 2021 low we have the lower channel line of the November 22 to date bear channel. And that's currently between 487.92 up to 537.33. And that's also highlighted in bright red this time on my daily chart. Over all of this is still the shadow of the monthly key reversal down we saw in January. US dollar against the Mexican peso. A second bearish black crow and a follow-on lower to the previous session's bearish engulfing pattern. It continues to be an interesting move lower as the market seems tempted by the congestion below, consisting of the lower channel line, currently at 1776.70, and highlighted in dark blue on my daily chart, of the September 22 to date bear channel, along with the neckline currently at 1786.5, and highlighted in purple on my daily chart, of the February to April 2021 head and shoulders top. These two have acted as the latest roadblock in this market's journey south. It is interesting to note that the lower bear channel line and the neckline are now separating away from each other and thus reducing their combined potency. Meanwhile above we have the declining short medium moving average, currently 1841.63, the February 2020 lower 1851.71, and the neckline in bright green, currently at 1855.23, and that's of the January to May 2021 head and shoulders top. This neckline had been important back in February when it was getting tested, but has since diminished. I also note the declining short moving average nearby, currently at 1819.83, though I suspect that may be more coincidence than by design. Now, so far today, a lower open and an immediate reactionary move back up, looking a lot like a combined bullish opening white Mariposa and bullish engulfing pattern. I was wondering if the tempting of the supports below would result in a consequence. Well, today it seems to have generated something potentially just that, a possible consequence of all this testing.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.